Okay, welcome to the Swing Trading with Cycles channel. We're going to do an update on the Nifty 50 today. So that's basically the Indian stock market. You hear a lot about this, because it was making new highs while other markets were not. Right? I mean, it's still pretty close to all-time highs, and the economy is growing rapidly. Now there certainly is some currency risk, etc. So be careful out there. And as always, none of this is financial advice. I thought it'd be good to look at this because price action is price action, and we can really look at anything, right? And so it is December 30th, last trading day of 2022, and obviously last trading day of December as well. So fitting that we're gonna start 2023, and let's think about how this market is set up for 2023. In this case, the Nifty 50, and broader context. The U.S. stock market is moving into weekly cycle decline. If you're new to this channel, you can definitely take a look at those videos. Very clear sell signal we had the other week with the Fed sort of hawkishness. We had a big bearish outside candle. So very likely that drags down other markets as well. So that's important to understand. But this is your annual chart. So this is your yearly chart where every candle is one entire year of price action. And man, look at this thing. So we had this period of consolidation. And this starts in 1990. So we had this period of consolidation for 1995. And notice the U.S. stock market was roaring in 1995. But from 1995 to like 2002, we basically did nothing here, right? And then it just kind of roared. We did have the pullback for the global financial crisis. That's your big red year, 2008. But since then, it's just been up, 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 up and away, right? And so the expectation, this is a nice, beautiful uptrend, is that the next daily, weekly, the 2023 candle is going to be something like that, right? But the question is, how do we get there? What's the path, right? So let's zoom in, because this is obviously really high level. This gives you a sense of the trend. I mean, this thing is on the tippy toes of and it's also green for the year, which is not true for many indices. Let's zoom down to let's go to the quarterly chart next, right? So on a quarterly level, you can see we've actually been consolidating a little bit. So this was your big COVID crash. That was your Q1 of 2020. And then it was just like straight up from there. Let's just see what percentage increase is that. So let's say from this low here, not even from the Pico bottom, you rallied 135% to this top here what is that? That's Q3 of 2020 or Q4 of 2021. And now we've entered this kind of consolidation. Obviously, global stock markets in general have pulled back massively. And so you see it had a red Q2, but pretty strong Q3 and Q4, and did make a new all-time high. Again, not something that most markets did. So that's important to know about. As we zoom into the monthly chart, we'll start to now kind of think about how we can incorporate cycles analysis. And if you're not familiar with cycles analysis, take a look at the pinned tweet. There's a playlist in there, 2 videos, goes through cycles analysis methodology. There's also a write-up. And you also want to make sure you understand what a swing low is and what a swing high is. Briefly, I'll say a swing high is how a downtrend begins. A swing low is how an uptrend begins. So if you think about that, if a swing high starts a downtrend and a swing low starts an uptrend, you want to buy after swing lows and you want to sell after swing highs. And that's what these arrows are, right? And obviously this is all hindsight, and you can say, oh, well, yeah, so you can see what happened in hindsight. Well, duh. But that means that gives us a chance to understand what's happening in real time now. And that's using multiple time frame analysis, and that's what we're going to look at. And what I'll say to you is, if you can't spot a market top and market bottom from the past, then you have no chance of doing it in real time, right? Almost think of it as like, if you can't make a free throw when no one is guarding you, how are you going to make a three-pointer with defense on you, right? And so if we think about the way these cycles work, and again, take a look at that content. I'm not going to explain cycles in great detail here, but the short version is cycles really just categorize how long a rally lasts and then how long a decline lasts. So if we look at this cycle as an example, this rallied for 44 months. So this is a monthly chart. This is a monthly chart, excuse me. Each candle is 1 month. So this rally lasted 44 months, and then it declined. You could do the math. So it ended on month 53. So 53 minus 44, means a decline for about 9 months, right? So a 44-month advance, a 9-month decline. And we can actually just, let's use the what is that? The path, just so to be clear, right? So that whole thing, right? 44 months. This thing, 9 months. So that's a pretty bullish cycle. And then you have this thing that rallies for 25 months, then declines for, what is that? 38 minus 25, 13 months, right? Then you have this rally for 39 months, and then the decline for 11 months, because that's 50, right? So you get the picture, right? And then you have this as a 47-month rally, and then a really short decline, just 2 months, right? Which is kind of crazy, kind of unprecedented, but also this was an extreme drawdown from COVID, right? And the percent decline was actually 40%. So it almost made up for it by like the magnitude of the shortness of the decline was made up for by the magnitude of it. So you can see there's this period of around, this is 50 months, or excuse me, this is 49 months, this is 50 months, this is 38 months, this is 53 months. The point there is that these are periods of time where you have an advance and then you have a decline. Another way of saying a cycle, right? And so that gives you a sense of like projecting that forward. So this right here, we just experienced a 19-month rally, right? So right there, from there to there. That's from the COVID low. So since the COVID bottom, we rallied for 19 months. So we topped out, what month was that? October 2021. And then we declined for 6 months because we made a bottom in June of 2022. And then we started a new rally, right? So I'll remove this. And so the speculation here is that maybe this was a shorter cycle that was just 27 months. So it had a 19-month rally and then an 11-month decline to finish off on 27. No, excuse me. A 19-month rally and an 8-month decline to give you a 27-month cycle. That would mean that we are in month 6 of a new cycle, right? So this is month 1, 2, 3, 4, 5, 6. Now the catch is the high can come at any point, right? And for these really long cycles, the high came on month 47, month 39, month 25. So that was a little bit of a shorter rally. But look at this like really sideways grindy period. You're gonna have much, and I didn't categorize these, but like if we can kind of look at these ourselves really quickly. You can see this little rally from this little swing low, for instance, to this rally is just, what is that? That's just 8 months, right? And then you don't get a low until month 23. So you rally for 8 months and then you decline for something like 15. So it could be that we're setting up for something like that, right? Where this is going to become a lower high. So to be clear, you imagine maybe something like this. And then that, right? The other scenario is that this is just going to become a higher low, right? And again, what's going to actually happen? We're going to have to look in real time at the weekly charts, and we're going to look at that next. Might end up doing something like this and then continuing. And we'll see in real time on the weekly charts and the daily charts which path it's more likely that we're taking so we can get long appropriately. The other thing to be aware of is maybe this isn't a cycle low at all. And we're going to make a cycle low around month 40, right? Like in that neighborhood, right? That like we're actually going to get a longer cycle that's like something like that, like 47 months, right? And so that would be a low in February 2024. And so we do something like this, that, and then make a lower low. Now that would be a doomsday scenario. I think that seems kind of unlikely. But if we do get more evidence that it's going to happen, we're going to see that on the lower time frames and can position accordingly. So let's look at those lower time frames. What do the cycles look like on the lower time frames, right? So it's the same idea. You have cycles on every time frame, all levels. And so the last very clear weekly cycle low was on the week of June 13th, 2022. We then kind of rallied. So what is this? How long did this rally last? Let's see. So this rally topped out on week 24. So it's the same kind of concept, except we're on a lower time frame, so we're not talking about months here. We're talking about years instead. We're talking about weeks, and we'll also go down to the daily cycle. So it's possible that we just got our weekly cycle low last week, right? Now, very tactically speaking, this week is just an inside week right now, right? We are inside the range of the previous week. So the previous week's high is 18,473 and the low is 17,779. And so we have to break out of that range to see, like, are we actually going up? Or because the possibility is that this is actually just a little lower high that's going to lead to a lower low. What I'll say is that we are in the timing band where you might expect a weekly cycle low. So this last weekly cycle was 25 weeks. This was longer at 35. This was longer at 30. So maybe there is something to that. The point is, there are very clear levels. If we break below that 17,779 level, then you can kind of expect we might come down and test all the way all the way down to like 16,800, right? That would be your next kind of logical target, like almost like a magnet. And so we'll see what happens next week as we open for the new year for 2023. It'll put us in an interesting position where we have to get out of this range to try to avoid becoming a lower high. And if we think about the weekly, so those are the weekly cycles. Now, there are daily cycles within the weekly cycles, and this is your last very clear daily cycle low, right? Just like we could identify our last very clear weekly cycle low. This is our last daily cycle low, very clear as day, right? And this is an important concept to understand. Every weekly cycle is also a daily cycle, but every daily cycle is not a weekly cycle. And so this rally topped out on day 41, right? So this is a pretty long, some things have long weekly cycles and some things have shorter ones. There's not really a rhyme or reason to it, honestly. And so this is where it gets interesting, right? And if you look at the content, you'll see how the cycles content, how do we know we have a cycle low? What criteria do we use? So this is potentially a daily cycle low on day 58, right? Is that a swing low? So that's 1774. Yep. So a potential daily cycle low on day 58, right? Now, just as we talked about, that long-term cycle could end up rolling over early. Same exact thing could happen on this smaller time frame, where we could see a world where we end up like this thing rallied for 41 days, right? Maybe we're not so lucky this next weekly daily cycle, and this doesn't rally for 41 days and it rallies only for a shorter period, right? That's what we would have to be vigilant for. But we are potentially on day 4 of a new daily cycle. So that's important to kind of understand. And that's where the actionable signals come in. If we're going to get a bearish weekly cycle, we need to have a bearish daily cycle first. And in the same vein, if we're going to have a bearish long-term cycle, we can't have that until we have bearish weekly cycles. So that's where the alpha is. If you can understand what's happening on the daily cycle, it'll give you a sense of what's likely to happen on the weekly cycle, and so on and so on. And that's how you can build a very solid trade that is backed by a lot of data, right? And you're triangulating multiple points. So we'll continue to watch this and we'll continue to update. This is my first video on Nifty. If you find value in this content, I ask you to please like it. It helps the algorithm, help more people find it. And certainly please subscribe to the channel. If you're finding this useful, I'll continue to give updates on this. We'll kind of see where this goes. Again, the U.S. indices are definitely under pressure, and that's probably going to pull everything down. I mean, you can see today wasn't a great day to end the 2023. But we're going to have to watch for this. And again, swing highs and swing lows, those are the patterns that you want to understand, because a swing high signals a cycle top has occurred and the decline is beginning. A swing low signals a cycle bottom has occurred. And again, not every swing low is a cycle low, to be clear, but every cycle low is a swing low. Super important to understand that concept. So we'll leave it at that. We can also go into like the bank, the bank index within this. We can look at some specifics as well. Again, let me know if you're finding this content valuable. If you are, I can continue to kind of go deeper here. But I know this is a market that a lot of people are interested in. Again, it's probably going to be pretty bullish for quite a while. The fundamentals work as well. So I'm going to be watching this a little bit. And we'll also maybe dive into some of the ETFs that U.S. folks can get exposure to. So we'll leave it at that for now. Thank you for watching.